All right, so let's begin the show. And today on the show, we'll be talking about NFOs. We are going to talk about the NFOs that were launched in 2023, which have been the innovative ones and which got the investors' attention as well. To discuss more on this today, I'm joined with Aditya Agarwala, Head of Research and Investment, Invest for Edu. Hi, Aditya. Good evening and welcome to the Money Show. How has the year been as far as the launch of NFOs are concerned? Let's just get a recap.
Hi, Kavita. Good afternoon. Good afternoon to all the viewers as well. Oh, it's been a fabulous year, both on the front of NFOs and IPOs. Markets have been buzzing around, and people have welcomed the NFOs as well. But slightly lower as compared to 2022, I guess, but very marginal. I guess 215 to about 220 NFOs have come out. Few are still lined up at their live at the moment. But overall, the response has been phenomenally well. And this year, what is remarkable, Kavita, is we have seen a slew of sectoral and thematic funds which have seen a new launch, and there's been a good participation as far as the response is concerned from most of the investors, and market participants have welcomed them with open arms, and they've seen good response. So about 45 to about 44 NFOs have seen which are purely based on sectoral funds. So that's a huge number.
You're saying the focus has been, or the good response, if we talk about that, sectoral and thematic has taken the way away, and 45 NFOs which have seen keen interest from the investors. But then, what, according to you, has been the largest NFO collection?
So I have not tracked the exact numbers of largest NFO collection, Kavita, but I guess the response has been phenomenal, which is seen by the numbers of mutual funds that we get every month. So the number has been phenomenally large if we talk about the NFO infusion as far as 2023 is concerned.
So let's just talk about the sectors and thematic NFOs that were launched and have got good response. Top 5, according to you.
So just a word of caution before we talk about the top sectoral or thematic funds. You should only invest in these thematic and sectoral funds if you understand and the sectors and the cycle of the businesses that you are investing in, because these funds take exposure in specific sectors and stocks, and which participate during the economic turnarounds, an upturn and a downturn. And if you are fully aware and confident about the fact that what you are buying suits your risk profile, and then at the moment will give you an alpha over the existing funds or maybe index, then it makes sense to go for a sectoral funds. Having said that, yes, Kavita, there are a slew of sectoral funds which have come out, and they do look attractive to me. Because if we talk about what's the first growth driver for the markets and for the economy, looking at that, maybe we can pick a few of the sectoral and thematic funds that are available at the moment. Top of the list would be a Bandhan Financial Service Fund. It's a banking-based fund, and then I believe banking sector and NBFCs are scheduled to do well in the coming times. So that is one fund that definitely should be on your radar. If you are looking at manufacturing, as Make in India is a big push from the government, and we are seeing good traction in the manufacturing sector. So Quant Manufacturing Fund is also something which is looking very attractive. They have a decent exposure to a lot of these manufacturing sectors, and it's a good mix of exposure to these sectors. To talk of them, they have pharmaceuticals, they have power generation, they have iron and steel, they have refineries, they have medical equipments and supplies. And mind you, Kavita, there's a government's push as well as far as your insurance is concerned. So these medical equipments and supplies will see a push as well. And power generation, as we all know, we are pushing towards more cleaner and greener energy. So power generation is something that will see a good push. So Quant Manufacturing Fund is something which looks attractive. One should definitely look at. Manufacturing fund. Innovation fund is also something that is an interesting bet, because if we look at the way a lot of these fintech companies are now coming up with IPOs and they're getting listed, e-commerce companies are there, then your retail is there, auto components are there, a lot of EV players are there. So Nippon India Innovation Fund is something which has catched my eye, and that definitely looks attractive. They have an exposure to private sector banks, auto components, retail e-commerce, two-wheelers, financial fintech that we call technologies, should have exposure to that as well. Then how can we miss an IT fund? Because that has been always the growth driver for the economy. And Tata Digital Technology Fund is something which definitely stands out. And if anything, we look at the way the IT indices have been moving around for the past 2 weeks, I believe technology fund should be on your radar. So the top sectoral funds for me would be a gamut of entire sectors, so that if you take exposure in these sectors, you are well covered and diversified as well, Kavita. So a financial service fund, Bandhan Financial Service Fund, a Tata Digital India Growth Fund, then there you have Quant Manufacturing Fund and Nippon India Innovation Fund.
All right. Now, talking about these are topics that you presented, but then having said that, tell us something about the existing funds of these categories. How have they been performing, and why do you think it's a good pick for an investor to go for an NFO if at all there is an existing fund of the same theme or sector?
Kavita, to be honest, you don't get an advantage by investing in an FO, very honest. Rather, if given a choice, you would want to invest in a fund which is already existing there for at least 1 year to about 2 years, because then you get a good look at their performance for 1 year, 2 years, or maybe if they're listed there existing for 5 years, you can see the performance. Whereas these NFOs are concerned, you hardly see 3 months to about 1 month performance. Most of them so far have done well, the ones that I've spoken about. But to be honest, NFOs don't give you any extra advantage over and above your existing mutual fund schemes which are there. So that myth that you should put money in an NFO just because the NAV is trading at 10, that is wrong. And plus, the expense ratio is slightly higher if you invest in an NFO. So to be honest, NFOs don't give you advantage, just that these funds, some of them are new and innovative, and maybe they give you an exposure to the sectors which otherwise most of these schemes and mutual funds don't give you an exposure to. And they are the pillars of the economy, which are now coming in the forefront. So which is why I've selected these NFOs. Apart from that, to be honest, NFOs don't give you any extra advantage over the existing schemes.
I think that's a good roundup that you gave on how should one go about if they want to put money in NFOs. Thank you so much, Aditya, for being on the show and helping our viewers with this today.
Pleasure, Kavita.
Time for a quick break, but post that, let's get your mutual fund portfolio queries answered. I'll be joined by Pankaj Matwar after this break.